Hey everyone, welcome back to another video where we will be discussing the difference between assets and liabilities and why the rich are rich and the poor are poor. Understanding this concept can help you make better financial decisions and ultimately lead you towards a more prosperous future. So let's get started. First, let's define assets and liabilities. An asset is anything that puts money into your pocket, such as rental property or stocks that pay dividends. Liabilities, on the other hand, are anything that takes money out of your pocket, such as car payments, credit card debt. So let's talk about the difference between the rich and the poor, right? One of the main reasons why the rich are rich is because they acquire assets that generate income, while the poor tend to accumulate liabilities that drain their income. Did you know that 80% of millionaires are first generation rich, meaning that they didn't inherit their wealth? They accumulated their wealth by investing in assets that generate income over time. Additionally, the average millionaire has 7 streams of income. And on the other hand, many people who struggle financially tend to have little to no assets and often have high levels of debt. In fact, the average American has around $90,460 in debt, including mortgages, credit card debt, and student loans, just to name a few. It's important to understand the differences between assets and liabilities because they can impact your net worth. Your net worth is the value of your assets minus your liabilities. The higher your net worth, the more financially secure you are. Therefore, it is important to focus on acquiring assets that increase over time and generate income. Bad debt can be a major roadblock to building wealth. When you carry bad debt, you're essentially paying someone else's interest to use their money. This means that you have less money to invest in assets that can generate you income. Additionally, carrying high levels of debt can impact your credit score, which can make it more challenging to qualify for loans or credit in the future. Now, notice I'm saying bad debt and not debt, because not all debt is bad. As a matter of fact, debt can be a great thing if it is utilized correctly into purchasing assets, most commonly like a home. This is why real estate has created the most amount of millionaires over any other investments. Saving your money in a bank account is a terrible idea, and you should only have enough to cover an unexpected emergency. The rest of your hard-earned income should be allocated into investments that will provide cash flow or at a minimum appreciate over time. The US dollar is losing value in front of your very eyes, and the only way to protect your money is by putting it into wealth-generating assets. Understanding the difference between assets and liabilities can make a significant difference in your financial future. Acquiring assets that generate income and reduce liabilities can help you build wealth over time. Remember, the rich are rich because they invest in assets, and the poor tend to accumulate liabilities. So start investing your assets today and take control of your financial future, because no one else will do it for you. Knowledge is power, and the more you know, the better your decision making will be, leading to a prosperous future. So, if you enjoyed this content, as always, please leave a like and consider subscribing for more content like this. And if you're looking for a local agent in South Florida, feel free to contact and reach out for any questions. So I will see you guys on the next video.